Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. Coming up on tonight's show, we've got two important issues. We're looking at the GST bill, India's most transformational tax move of late. The GST bill is likely to hit another hurdle at the Rajya Sabha. Is the bill in its current form workable? And more importantly, if things don't go as planned, is there a plan B? That's the question we're putting to Santosh Dalvi, Indirect Tax Partner at KPMG, and Dharmesh Panchal, Partner Indirect Tax at PwC India. Next up, we are going to be looking at the real estate regulatory bill, which has now been referred to a standing committee. The most important question, is the buyer's interest still being protected? That's a question we shall put to Mona Jalota, Vice President Strategies at Coldwell Banker India, and Anuj Puri, Chairman and Country Head at JLL India. Coming up first, let's look at the most contentious issue of GST, the most transformational tax move if it were to happen. Well, joining me now to discuss the GST bill is Santosh Dalvi, Indirect Tax Partner at KPMG, and Dharmesh Panchal, Partner at Indirect Tax at PwC India. Gentlemen, thank you very much for joining us. So, the big question as we go into the bill being sort of discussed in the Rajya Sabha and then potentially either cleared or not cleared is the bill fundamentally fine? You know, so there are doubts being raised once again, gentlemen, about whether some of those factors like alcohol, fuel, tobacco being excluded from the purview of the GST, the fact that there's been another 1% integrated GST being introduced, the fact that some states are still very uncomfortable and unsure about whether the central government will meet its commitment. So these are still a cloud over the whole GST issue, even as it sort of awaits passage in the parliament. What's your sense, Dharmesh?
Well, my sense is that I think the Modi government has done reasonably a good job in getting consensus, and on that basis the bill has been introduced in parliament. There are some aberrations in terms of the 1% additional tax, but you should remember that it's difficult to achieve a perfect GST. So at least you make a beginning by achieving the best possible GST that we can bring in, considering the multiple stakeholders that are there.
Right. Right. So, Santosh, let me put that question to you. So, you know, the feeling is that we should have started with a more than perfect or closer to perfect GST rather than something that goes in an evolutionary format, because the evolutionary format will actually create more problems than perhaps we started with. Would you agree?
Of course, it's better to have some GST in place rather than having nothing. Of course, you know, if you look at the present indirect structure, there are a lot of anomalies and it is fraught with so many complexities. So, the GST in whatever form it will be there now, I think it will be much better than the present tax structure.
Okay. But can you give me an example how things could be better under a GST, which as compared to the way things are, let's say with a certain product or a service? Or
yes, of course. You know, first thing is that if you are in trading business, you don't get full credit of whatever input tax you pay. I'll just give you an example. If you are in retail business, you know, whatever service tax you pay on your rental, you don't get credit because, you know, you have to pay VAT, which goes to the state government, whereas the input goes to the central government. And that obviously makes the business costlier because there is huge tax cost sitting in your business cost. So these are the, you know, basically you will get maximum credits so that there is no tax cost on business. You know, so at least whenever there is a transaction between business to business, there will not be any tax cost, except this 1% aberration, etc.
Okay. Dharmesh, what the other point was that, you know, it doesn't really affect the larger objective, which is, let's say, for instance, free movement of goods between states and so on, by excluding alcohol and petroleum and natural gas and tobacco. But the fact is that, I mean, one of the points is that if you exclude it, that there will be a cascading effect, particularly for petroleum and natural gas.
Yes, but if you look at the petroleum products which are out as the transportation fuels, but fundamentally the petroleum sector should be part of the GST because it does come into play and as an input into the value chain. You can keep alcohol as a demerit product out of GST, but what they have agreed is at 2 years from the date of introduction of GST, they will take a call to extend GST to petroleum products. So it's there in the constitution. You don't have to go through again a whole process of amending the constitution, and that's a good thing. It's more about addressing the concerns of the state government as far as revenue loss is concerned, and that's why petroleum products is out. And 2 years down the line, if they see that the revenue is, the buoyancy is there, there's a case to extend the petroleum products to GST, which should be there.
Right. So, Santosh, you know, one of the other concerns seems to be the GST Council itself. Right. The central government has 1/3 of votes, and the other states have 2/3 of the votes. But centre, being a single large bloc, can actually veto if it wanted to various sort of propositions that came from the state government. What's your sense? I mean, are these all basically hurdles which could impede
Yes,
the bill?
Yes, it could be, the way the things have evolved, it has been working only on the consensus basis. Even the GST Council will not have any statutory powers or authority. They will have recommendatory authorities. So again, same situation will continue. So long as they go on building the consensus, that will work in favor of the GST. And wherever, they don't have consensus, I think that will lead to issues. So I wish they had some constitutional power or statutory authorities to at least stick to some of the basic principles where that would be in line with the GST principles.
Let me flip the question around in a way. So this bill has been through the paces, right? It's been through a committee before, a standing committee before. Various parliamentarians have looked at it. Various people have looked at it. I mean, when I say people, I mean in the external world. So most concerns have been addressed at this point, right? Except for what the states want or feel that they may not get. Do you feel that enough has been done to now, iron all the creases out and really now get the thing going?
I think we are ready to go. Enough has been done, of course, but still there are many areas which need to be done. First of all, appointment of GST Council, which can happen only after the constitutional amendment will goes through in Rajya Sabha and further ratification by various state assemblies, at least 50% state assemblies. Then the whole GST network has to be in place, and that would be the backbone of whole GST implementation.
That's the tech backbone for which work is going on.
Yes, and I understand there is a significant work in progress they have done. There is very advanced stage of that. Then there will be draft law, and also whole change management process has to be done. So a lot of things around training the tax authorities, and again bringing a lot of business processes as far as government is concerned. So, but I think a lot of work is still under process. So.
Right. So, Dharmesh, is there, suppose let's say things slow down again, right, for various reasons because the committees express concern over issues and so on. Is there a plan B that we should be looking at?
Where if it doesn't get cleared in Rajya Sabha, the plan B could be a joint session of Parliament and then getting the 2/3 majority and getting the bill passed.
So that's a parliamentary approach. I'm talking about what else needs to be done on ground to ensure that all the fears, the concerns are allayed and things keep moving.
Well, I think the fears and concerns of the state governments have been addressed because you're providing the constitution itself that you will be compensated for the revenue loss. So it's more of a political issue which needs to be sorted out rather than having more of a consensus effort being there, So, but definitely if it gets delayed, then whether we'll see 2016 being a reality, in any case it seems to be a stretch target. So if it goes further delayed in Parliament, then I think we are looking around 2017 definitely.
Right. So if I were to ask you the 3 reasons, Santosh, and I'm going to ask both of you, the 3 reasons why the GST bill should be pushed through in the current form, what would they be?
First is, yes, we have to go live from 1st April 2016. So,
that's a deadline. Yeah. So
yes, so that's the deadline. I know, and we will never have perfect GST to start with.
Okay. And both of you seem to feel that a perfect GST is not a precondition to sort of get it going.
Again, that would be evolution, as we said. Okay. Second thing, yes, I think it would certainly help industries, both local as well as everybody who does business in India would be beneficial because
their paperwork will reduce, because the ease of moving goods across borders will also.
I hope that paperwork gets reduced, but at least from the tax incidence perspective, there will be a lot of tax efficiencies brought in. So in line with doing ease of doing business in India, I think that would be one step closer to that. Third is, of course, it will boost overall image of India across the globe. I think from that perspective, there are 3 reasons why we should.
So ease of doing business is something that we've been talking about as a country as a lot. Then this is a critical component of that, bringing about ease of doing business. Dharmesh, 3 reasons why you feel that it has to be.
Well, introduction of GST is critical to the core competitiveness of the Indian industry, because when you have cascading taxes sitting in and then you are trying to be competitive, therefore GST is first really an economic need if you want to see the economy growing in double digits. That's one. Second, the expectation from the Modi government that reforms would come in, and therefore to send the right signals, the GST needs to be introduced. And third is obviously the ease of doing business. And you don't have to grapple with multiple taxes and the prolonged litigation. I'm not saying that in GST that's not going to happen, but you need a simplified tax system. Therefore, the question is also which I would address is whether 2016 is something which should aim at, or should you do a good job and bring a GST which is reasonably clear and simple to implement. Not necessarily a perfect GST, but a simple GST which is easy to implement and really fits into the theme of doing.
So when you say simple, what would it not have that's there today?
In terms of now, the focus should be, because in terms of design, you have done what best could be done, given the multiple stakeholders which are there. But in terms of clarity, in terms of and in terms of rates, they should be not as high as 27%, but in terms of place,
and
in the place of supply rules, so that it should be easier for businesses to implement. Your credit mechanism should flow through seamlessly. You know, so the focus would now be on the legislation and on the process if the bill gets passed. That's where I would put my bets.
Okay, so let me come back to you, Santosh. So assuming, let's say, everyone understands these 3 or 4 key factors that are critical to get the thing going, which includes ease of doing business, the perception of India as a place to do sort of business and, you know, sort of manufacture, transport goods and so on and so forth. What could be the sort of clinching? Is there a sort of deal breakers? I mean, the opposite of a deal breaker, which could help people make up their minds?
From
a state perspective, let's say.
State perspective, I don't think there could be any, because most of the concerns have been addressed. You know, even you know, today what we are looking at is power sector, petroleum sector is out. I think that was a major concern. Plus 1% CST as an additional tax on every interstate supply would be there. I think that is the major sort of relief given to the state, and it would also help them generate more revenue, although it may not be in the best interest of the industry. So I think even that concern also, any probable or possible revenue loss also has been addressed. So to my mind, I can't think of any other
sort of overbearing.
I think only after that only this constitutional amendment has reached Parliament.
Okay, okay, fine. If it's reached here, then it's gone through all of this.
Yes.
Let's look at it from the point of view of the small trader, right? Small trader, shopkeeper, you know, the transporter. Who's listening to them? Dharmesh, what's your sense?
Well,
is anyone listening to them?
Of course. They would have their concerns in terms of more of ease of complying with the law, and a larger concern would be that 2 tax authorities should not be auditing them, you know, or scrutinizing their records.
So these 2 would be income tax and
with a central GST authority and a state GST authority, and they would look at only one authority coming, especially the small traders. So, and I believe that there are discussions going on that point also, that below a particular threshold, it will only be the state governments who would administer both the GSTs. But that's something which is still at a discussion point. You know?
Okay.
So their concern would be that it should be easy for us, and we should not be answerable to 2 tax authorities. Today, a small trader is only paying VAT, you know, so he gets subject to a central authority also.
Right. Santosh, I mean, what about those at the sort of, you know, at the bottom of the pyramid, particularly in the economic bottom of the pyramid, or whose lives are also affected by a new tax regime?
Yes, I think first I can think of is services. You know, today every, you know, every alternate person has a mobile. You know. And today the service tax is 12%. Under GST it would be supposed to be around 20%. You know, if they come with the reduced rate on service tax, but still it will be much higher than the present rate of tax. I think that would be certainly hitting the lower, you know. Plus some of the products could become, you know, costlier, and that's where it's said that, you know, after implementation of GST, the GDP will grow up by at least 2%, where, you know, so everyone will be impacted.
Because the value of goods would have risen.
Might be, yeah.
Right. So, but then isn't that make it a difficult sell then, to at least to a politician, because you're saying that, okay, at the end of all of this, prices are going to go up. There may be some improvement in the way you manage your books and the authorities you respond to.
Well, I would say that introduction of GST as a function of rates, if you look at goods, the goods sector, today a 12.5% VAT and a 14 on a 12.5% excise, 25 plus taxes being there, and if you have a GST of 20%, then the manufacturing sector would be benefited. In terms of taxation of services, whether they will make an increase from the present 14 and a 2%, Swachh Bharat says 16%, that's what he's saying that in the budget, I'm aligning with 16%. And so 4 years back, the finance minister also said that GST rate on services will be 16%. After 3 years, it will get converged to 16. If they really make a big jump from 16 to 20, then definitely it has an inflation impact. But overall, if you look at rates and set the rates at the appropriate levels, then you would definitely see a more positive impact on the manufacturing sector, services sector, also possible to some extent negative, but you also have to look at what are the extent of credits they are getting.
Right. Okay. So we're running out of time. Just one quick line from both of you. Santosh, you first. Is this bill, the GST bill, in good shape to move forward?
I think it's a fact of life. Now it's a reality. So I think we should go ahead with this.
Okay, fair enough. Dharmesh?
Given the multiple stakeholders, I would say this is the most optimum solution which the government could work out and present in Parliament.
Right, and then therefore it should evolve. Let it evolve.
And GST would evolve. So you start off with not the perfect GST, but make a starting point somewhere, and ultimately.
And there's no harm in having that approach. Absolutely. I mean, the sort of incremental evolution approach. Right. Okay. We've run out of time. Thank you so much. We're going into a break. Coming up on the other side, we talk about the real estate regulatory bill. Is it really safe for home buyers? And are there some real concerns that need to be addressed? Stay with us. Welcome back to Policy Watch. Life is supposed to get simpler, if not safer, for real estate buyers across the country with the new real estate regulation bill. But however, that will have to wait, as the bill has been referred to a standing committee at the Rajya Sabha. Now, the big question is, does this bill in its current form really make life safer for home buyers? That's the question we are going to be putting to two of our guests, Anuj Puri, Chairman and Country Head, JLL India, Mona Jalota, Vice President, Strategy and Operation at Coldwell Banker. Both, thank you very much for being with us. Anuj, let me begin with you. So this bill has been doing the rounds. There have been a lot of issues which have been raised, not just by people in Parliament, but also by people who follow real estate, consumer groups, buyers, and so on and so forth. Where do we stand today in terms of answering that fundamental question? Is it safe for home buyers?
So it's a really good bill, Govind, if you to ask me. It's much better than what we have today, who really don't have anything. Yeah. So it is a very good bill. Yes, it has got diluted from when the UPA government had got in the bill to where the BJP-led government is brought it up. But it hasn't diluted to the extent that I thought that it should have been referred to the standing committee. Yes, 2 or 3 provisions that have been diluted, you know, and they have been diluted.
The threshold of buyers, builders can change plans, escape clause for builders if things go wrong.
Yeah, which
it seems to be weighed towards builders. I think maybe that's the concern.
But Govind, there are 3 stakeholders. One is the developer, one is the consumer in there, and one is the government authority. So you had to take the inputs of all the 3. I thought that the first bill, which the UPA government had got in, did not address the concerns of the stakeholder as a developer. So I'm not saying it's for developers that it has become, but you know, there were arguments. So I'll take a simple argument. The developers are now allowed, instead of 70% of the monies to be kept in escrow, 50%. So there's a dilution of 20%. Now the developers in Bombay are saying is that the land itself, which we are buying from our own money, is more than 50%. The construction cost is much less than 50%, but you can keep 50%. But why do you want to keep 70%? When we've already spent 50% on the project in buying land through our own money. Right. So those were the things that were not being addressed. And I still think 1 or 2 things have still not been addressed. For example, you know, I said 3 stakeholders. One of the big stakeholders is the government, and the government hasn't included themselves in this bill, which means any delay that is going on with the state government regulatory authority in approving the plans. The penalty is on the developer. Right.
Yeah. Yeah. So of course the bill does say that every state will have a regulatory authority and therefore create a new structure of sorts. Mona, what's your sense? I mean, is this? Let's address the fundamental question first. Is it a safe bill for buyers?
So definitely it provides some amount of safety to the buyers. Whether it's made it foolproof for the buyers, I'm not so sure. The most exciting part of this bill is that if you are planning to put some regulation, which means per force you will have to have a regulatory authority. So a real estate regulatory authority is one thing which is exciting, you know, people like us a lot. We don't have any regulatory authority to go to for now. Once that comes in, of course it is going to have a longer standing impact on the real estate market. It's too early in the day, and the provisions that the bill have mentioned are too few to kind of really make a holistic opinion on whether it's really going to you know, be beneficial for the buyer in a 360-degree view. But definitely some key elements are there, more accountability from the developer's side. I agree with Anuj though that, you know, the government has not included itself in this entire, you know, tri-party agreement that they are trying to do. eventually somebody has to pay for the delays that happen.
Right. Okay. So, Anuj, just to sort of refresh, one of the other things the bill also talks about, the real estate agents. I mean, the intermediaries should also be registered. They should also be sort of brought under the ambit of the authority. Are all these things going to make life simpler, or is it going to make it more complex?
So it'll definitely make it more simpler, more transparent. There'll be more governance that'll come and go in. And previously that wasn't element that was covered in the previous bill. So I'm delighted that it is covered because there is a lot of riffraff, both at the developer bottom end and at the agent's bottom end. And you have to bring in more ethics. You have to bring in more responsibility. In all the mature markets, it is there. It's nothing new. All mature markets have licensed brokers in there and developers who have to register with the authorities. I think where the concern is coming in, if you were to just put the consumer for a moment on the side, and I'll come back to the consumer as well, is the developers are saying that this should not become one more window of approval. As it is, we've got several windows of approval. Does it mean that we've already got 50 windows, for example, the way we have to get in the approval? Does it become the 51st window, and hence there is more money that has to be paid to get in the approval? I think that strategically one will have to view that this is an enabler, not one more window of clearance that is required. And if the state governments put in a regulator with that view, I can tell you consumer will definitely have a much better positioning than certainly what they have today. Govind, there is no law today to protect other than what the civil law is.
Right. So, Mona, do you see this playing out equally and efficiently across the country?
Definitely, if the government wants to do it, they can do it. We have seen certain initiatives they've taken have done fairly well. I think the important part here is to outline roles and responsibilities clearly and also to avoid any kind of ambiguity. Like one part of the bill, which now the NDA government is proposing, they've made a little bit benefit for the developer to say that minor alterations in floor plans are allowed. Now, what is that minor alterations? We don't know what they are. They haven't specified that. So that is ambiguous enough. They also have left a window for the developers to, to say that if there is a delay, in an unforeseeable delay, they can go back to the committee and penalties could be revoked. Now, what do you mean by an unforeseeable delay? So all of these little things should be highlighted more categorically.
Right. Okay, Anuj, let me ask you a larger question, right? So some of these, when laws come into play, sometimes they come either at a peak of the market or at the trough. So what's it looking like right now?
Certainly at the trough of the market, no doubt about it, Govind. I think on the residential, the market is really at the trough in there. On the commercial, however, it's getting better and better. Every quarter, the prices are going up by 1 to 3% depending on which city you are, and there's very little good quality supply on commercial, and demand is coming in from Indian houses, American IT companies. So that's really doing well. I think on the residential, 2 or 3 things is really troubling. One, the buyer hasn't come out as yet in the market. Second, the debt is still pretty expensive for the developer. And third is that a supply overhang has happened in the market.
Right.
So all these 3 are starting to bite the developer.
Right. And to what extent could we say that the buyer is not coming back to the market because of a certain fear of dealing with the whole real estate space and the attendant risks?
So it'll be difficult to put a percentage of that. I would say is there are probably 3 or 4 things that the buyer is looking. One is definitely the risk. Whether the project will get completed, go in, whether
because you've seen some big names in Delhi.
Exactly. And whether there is financial wherewithal, financial closure on the project, whether it has all the approvals on the project. So they are happy to pay a premium on a completed. But under construction there is reluctance. Second is the thought is that prices may still continue to get corrected in that is. And third is that they're waiting for their increments in salaries and bonuses to go up to start matching where the residential prices are today. So I think it's a mixture of a fear whether the project is going to get completed and a thought whether the prices are going to get corrected and ability to have more firepower as money in their hands.
So let me ask a spin forward question, Mona. So if let's say this bill were to come in a manner that's largely acceptable to all sides, do you think it can actually increase the amount of throughput in this market, in the real estate market?
What do you mean by throughput?
Yeah, in terms of more houses being built, more houses being bought, people buying more, buying sort of more aggressively because they know that things are safe and they're being looked out for.
So in a longer term, of course, that is going to be the the byproduct of an initiative like this. In the shorter term, I feel the prices may increase because more transparency does lead to the money is becoming higher. remove many elements from the regular sale of an apartment. Short term, I feel the buyers will hold back to see what is happening, but long term, this is definitely going to have a positive impact on the industry in general.
So, Anuj, if I were to take a step back, what are the 1 or 2 key hurdles today that the sector faces? I mean, when it on both sides. I mean, our buyers, I think we've more or less defined, but on the developers in terms of identifying land, I mean, there are a lot of other issues as well.
I would say is the biggest one, Govind, remains approvals. It is still a very painful process. I know that the government has been wanting to bring in more easy approval process all across, not only in real estate, but all the other businesses. But in real estate, it is taking a lot of time. I must admit that where there are BJP government, they're trying to make that move to try and ease it out. Where there are non-BJP, it's taking that much more time. And I still feel is that it's good 18 months from the time that you buy land that you're able to launch a project, if you're lucky. That's 18 months really kills, because your second problem is that the interest rates are so high. So the two combined is what's creating liquidity crunch. Demand at a price is not a problem. So we're in a lucky country that there is enough and more demand out there. The trouble is that the demand is at a certain price and the developers are being able to deliver at a certain price which is higher, but the developers are saying, given the land price, given the cost of approvals, given the delays that are happening in us being able to launch the project, our cost is just that. We're just making a very thin margin.
So, for instance, low cost housing is another avowed objective of this government. There are smart cities, so all that means a lot of stock, right? So are the preconditions in place to sort of really spur all of that?
Not as yet, and I'm hoping that they will be in play, because if you were to ask me, the low cost housing in the current environment with the approval process the way it is, I doubt it that you'll be able to do it. So there will have to be a special scheme.
Mona?
The main part behind this is I feel that the government should allocate industry status to real estate. Once that comes in, a lot of things will be easier to do.
Give me one example.
Look at the basic supplies in construction. Look at your cement, look at your steel. There's a whole lobby there, there's a whole mafia there. They rule prices the way they want to, because this is not a regulated industry. There was an initiative taken by the government few months ago, where they sold bags of cement for $150 a bag, which are otherwise going at any price. To bring about these regulations to grant industry status to real estate is important.
So give industry status, but you're also saying that somehow figure out a way to really move approvals faster. Right? And even if, let's say, the bill were to be cleared in this form, there's no guarantee that approvals will move faster.
Not at all.
Right.
Not at all.
This, you really go to the regulator after you've sorted out all your land acquisition and so on and so forth.
So this is really protection of the consumer, not protection of the developer.
Correct.
In there. So the developer will still have to go through all the approvals. And if anything, before this bill, today they are able to launch in many states without the approval, and they call it as a pre-launch. With the introduction of this bill, they'll not even be able to do that. So today a lot of the financial gap was being filled through a pre-launch, and then they were still working through the approvals, that 18-month period. But once this bill gets introduced, they cannot do a pre-launch. They will have to get in all the approvals and then be only able to launch.
Right. So we're running out of time. So the question we started with was that, as this bill sort of gets referred to a select committee, they ponder over it and they come back with a firm answer, a firm report in the monsoon session. The one question they will be trying to answer is this finally, is this going to be consumer friendly or buyer friendly? You're concluding?
So 100%. It would be consumer friendly, buyer friendly. Can it become more friendly towards the buyer? It can, but you have to do a balancing act with all the stakeholders who are within the industry. You can't say, I'm only going to protect the buyers, which means I'm going to choke the supply. That itself will be counterproductive.
Right. And the other point that both of you made is that ensure that the government is also equally
participative
and participative. Mona, last word?
I have the same thought process. It should be buyer friendly and buyer protecting as well, but it should also look after the interests of the developers, and the government should take the majority of the responsibility to play the balance between the two.
Right. Okay. And the government, we feel, is that has the ability to put together that regulatory infrastructure, and
again, it will depend state to state.
Yeah.
Because it is within the states, and just on that one point that you said is how effective it'll be. It'll really depend on how effective the state government wants it to be.
Yeah. So some states may be faster and more efficient, and some may not be. Correct. Right. Anyway, so that's another point for the select committee to look out for. Thank you both for joining me. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.